Hey everybody. As folks are joining here, just want to say hi, welcome in. We'll get going probably at like the 2 minute mark. It's only a 30-minute presentation, so we'll give folks a little bit of time to get in here. But welcome everybody. Today, my name is Pat. I'm the CEO of Bitwave. We are going to be talking about digital assets, institutional digital asset management. So, and a little bit of treasury stuff thrown in there as well. It should be a fun conversation today. For everyone just joining, we're going to give everyone about a minute or two more to join up here before we get started. My name is Pat. I'm the CEO of Bitwave, and today we are talking about institutional digital assets and treasury management and all of those great things that we know and love. How's everyone doing out there? By the way, as we get going, please feel free to ask questions. Throw them in the chat. Throw them in the Q&A. I'll jump in and answer them. We're going to be going deep on some kind of pretty specialized parts of crypto accounting. I mean, everyone knows the basics at this point. I feel like we've done a lot. Crypto CFOs have done a lot to teach people up on that. And what we're going to be talking about today is a more niche part of digital asset accounting, which is institutional digital asset accounting, compliance, reporting. It's sort of a bigger, broader issue than sort of a simple one, because it really does get into a lot of different things that you might not think about. So, all right, well, let's get started here, folks. It should be a lot of fun. All right, well, my name is Pat. I'm the CEO of Bitwave here. You've heard from a few Bitwave folks today. That's how we like it. We like to come and share information widely about both ourselves, our product, and just talk about crypto as much as we possibly can. So, and stick around after this. My co-founder Amy will be the next up. She's talking about the enterprise state of the industry. So, Bitwave, I won't belabor the point, and we're not going to be spending a ton of time on demos and things like that. This is meant to be a very informational session. But at the high level, Bitwave, we've been around since about 2018, and we are the #1 enterprise digital asset finance platform. What that means is, the day that you as a business enterprise institution decide to bring digital assets onto your books, boy, oh boy, you have just opened a can of worms, and you've created this whole set of problems for the CFO's office. And what Bitwave does is our goal in life is to basically help the CFO's office and enable them to solve all these various problems that get picked up when you bring digital assets onto your books. So that is accounting, tax, financial operations, FP&A, financial, like payments. We'll be talking about a little bit today. And then, of course, the institutional side of this is looking at not just sort of businesses in general, but like as a larger institution, as an exchange, right now we're seeing so many exchanges pop up, which is amazing. They have a very, very special set of accounting, tax, and compliance requirements that no one else really has. And something that we have tooling to support you on, and something that we love talking about. So I'm excited to get into that today. So this is what Bitwave does. We take all of your different data sources on the left-hand side, from wallets to ledgers, to internal ledgers, to external ledgers, to custodials, to all that kind of stuff. We bring all that data together. We then have compliance tooling, accounting, DeFi and staking support, treasury management, NFT tracking, and then a lot of stuff around payments, and then feed it out into whatever ERP you might be using. There's gonna be some terms you're gonna start hearing me use. I'm excited to start doing these. So one of the things you're gonna hear me talking about today is IBOR versus ABOR, and I'm gonna use this slide to couch it very quickly. So an IBOR would fall under this internal ledger, and it's an internal book of record. I'm gonna be throwing that name out a lot because when you think about an institutions, they'll have a set of wallets that they're tracking, but that's not where all of their information is. And in fact, a pure Bitcoin wallet is actually not that much data in terms of what an institution tracks. So think about, one of the big exchanges. Think about TD Ameritrade. The actual in and out movements of stocks or money is a small amount of the data they manage. The large amount is their ledger. It's the trading system that they run that tracks, how much money do you have, what assets do you have, Microsoft stock, whatever it is. That goes for Coinbase, Binance. All of these guys have the same thing. The technology, or the word that you use to describe the technology from an accounting perspective, so us all here that we're talking about this, is called the IBOR. That's your internal book of record. And then ABOR is what we have on the right-hand side here, which is your accounting book of record. And a big part of thinking about institutional support and compliance for digital assets is thinking about this difference between your IBOR and your ABOR, because it's actually a really, really important piece of it. So it is like, We started thinking seriously about this November 11th, 2022. And I know that date because I don't know, it's just a funny date, but that's the day that FTX shut down, turned off all their APIs. And like anyone in Bitwave that has an FTX integration, there's this little thing on there that's like hasn't synced since November 11th, 2022. So we started seriously thinking about compliance as a institutional effort about that time. I mean, we were thinking about it before then, but like, everyone in the industry was so shocked by the incredibly shoddy practices and methodologies and controls that FTX was running, that we as a vendor in the space, we couldn't help but step back and say, well, like, what if they had been using us? And I say that they never were. My co-founder Amy emailed SBF a few times, but he never replied. Or actually, he did reply once, but he never bought. But they obviously were not running a tight compliance ship. That much is super obvious. And so we stepped back and we started thinking about like, well, what is the essence of like, how do we rewrite this world, an institutional world for compliance, and how do we think about how digital asset companies should be managing compliance? And that's really where Bitwave Institutional, which is what we're talking about, but also the deep thinking that we've done around institutional digital asset management in general comes from. This is a great quote from Deloitte, our buddies over there. Having extensive treasury strategy, here's the organization's established policies, procedures, and risk tolerance blueprint has become an essential component of digital asset adoption. So he's talking about treasury here, but it goes across the entire thing, is that like you as an institution have to be thinking very, very critically about how you are tracking all of your assets, how you are managing them, how you are, reporting that back up to the IRS and the various agencies. And we think that, obviously digital asset adoption is going to be enormous. We just hit the $2 trillion market cap for the overall industry. So you're going to see a new flood of exchanges and all these guys coming in. Okay, so here are some of the tenets that we've started to build up around digital assets, institutional digital assets. And I'm going to talk a little bit. Each of these has its own slide that we'll go into, so I won't spend a ton of time here. But let's just talk about the first one: segregation of assets. If there is one single thing that you take away from this talk, and if you have either clients or buddies or you yourselves are a institution and you are interested in like thinking about this stuff critically, the number one thing that you absolutely must do is cohesively have a strategy to segregate your client assets from your treasury assets. And I say that because it seems like it almost sounds silly to say it because it seems so obvious at this point. But even today, so many of the folks that we talk to do not think deeply about this because it's not easy to think about. So let's get into it just a little bit here. So another term that you're going to hear, and there's all these new terms. Once you start getting the institutional side, there's so many new terms that you have to kind of learn all these things here. So the new term here, FBO, is a really, really, really important one. An FBO account is a for benefit of account. So in Bitwave, when we set up, Bitwave has a lot of really cool features. One of them is we have full support for legal subsidiaries as well as logical subsidiaries. So when we go and we set up a complex organization in Bitwave, what we're going to do is we're going to structure it kind of like this. So let's say you have, and if you're familiar with NetSuite or any of the big ERPs, they're going to do something very, very similar, where you set up a top-level organization that represents your overall the org as a logical set of all these different subsidiaries. You're probably only ever going to do reporting out of that org. You're not going to do tax filing out of that org because it doesn't make any sense. You have your US subsidiary, your EU subsidiary. That's where you're doing your tax reporting. That's where you're doing your gain loss reporting. Your overall enterprise org is be used for management reporting. We'll then set up subsidiaries. So you have a few different subsidiaries that sit underneath you. Let's say the EU subsidiary, the US subsidiary. Inside of there, we'll tend to set up these logical subsidiaries. So it doesn't have to be tied to a corporation or anything like that. But the idea is that we're going to set up an organization that is your FBO org. And you're going to add all of your client holdings to that FBO. The reason this is so important is it goes hand in hand. Like, it's not just how you deal with it from an accounting perspective, it's how you think about it from a controls perspective. So what you are doing, or what we're going to tell you to do, is all of your, make sure that you are segregating client assets into its own set of hot and cold wallets. So you have a set of wallets which represent client assets. And then you have a set of wallets that are completely segregated that represent treasury assets. In the Bitwave organization, we're going to structure that where all of your wallets go into the FBO, and then all of your treasury wallets go into your treasury. So your client holdings all go into the FBO, the internal holdings all go into the treasury. So what happens, and that they might not be wallets, you might be using your IBOR to populate that data. So you might be feeding IBOR data. So this internal ledger that you're building up that your engineers have built, that might actually be going into the FBO as a source of truth. And we'll talk about this later, what it means to do a reconciliation between a IBOR and a blockchain, because those are not always necessarily 100% in sync there. So you're going to fill up your FBO. What happens then is there's a couple of great things. So first of all, your client assets are now protected. So if you go into bankruptcy for whatever reason, you have the way that this control structure is that your bankruptcy, the bankruptcy court that takes on the case is in a really, really good position to protect your client's assets. And that's obviously what everybody wants. I mean, that's the number one thing to do. So if you have a set of wallets and you say, these are my client assets, there's no treasury assets commingled in here. When you get, if heaven forbid something happens, you go into bankruptcy, you're going to have this really nicely segregated set of assets that you can actually handle. It brings up one really interesting point though, which I love talking about, which is, what happens is that you are in any FBO account, you are gradually accumulating digital assets. You are gradually accumulating treasury assets in that FBO account. So even if you keep them totally segregated, as people are trading over here, if you're taking a fee, or if you take a fee when people deposit, or if you take a fee when people withdraw, there is a small amount of that FBO that's becoming the treasury account. So here's one of the things that we do at Bitwave that enables this to work really well, is we enable you to do intra-company invoices. And so there's a lot of different ways to think about this. Some people throw up their hands and say, well, because you always are going to have these things combined, we're just not going to worry about it. We're just going to have our treasury and FBO accounts combined. And I cannot emphasize enough how terrible of an idea that is across the board. What you want is you want to have a very, very clear FBO account and then run an internal receivables process where on a weekly or a monthly basis, you're basically creating an invoice from your treasury subsidiary against your FBO subsidiary and then doing a sweep away from that. So that way you have essentially you have a debt instrument, and it's not exactly right, it's receivable, but you have this debt from treasury against the FBO that in case of bankruptcy, you can satisfy. But then you also still have this very, very clear story that you are never commingling your treasury and FBO assets. So I spent like a third of the presentation talking about this. That's how incredibly important it is to start thinking about, if you're doing anything around institutions, is to start thinking about how you segregate out a really, really concrete FBO book, wallet, set of accounts, all of that, and then your treasury on the other side, and then set up business processes where you're running like internal invoicing to sweep between them. All this stuff is part of the Bitwave institutional platform and things that we actually support off of it. So let's talk about controls here really briefly. So I've talked about this idea that when you set up this FBO account, you actually might not be adding blockchain wallets to that. And that might sound kind of silly, but like think about all the details. If you're tracking if you have an exchange, think about all the details that are lost in the blockchain. So the trades are lost, the fees that you're accruing are lost. So revenue that you as the exchange are accruing are lost. So that revenue does tend to be in your IBOR. Your IBOR says, okay, there was a trade between Bob and Joe, and the trade paid a fee. Each side paid me 0.01 ETH. That's the revenue that you're picking up. So you very often will actually want that whole transaction to get into your FBO account. But that leaves this really hard controls problem, which is that you are relying on your engineers. Look, I'm an engineer, so I can say this, but like you never trust engineers, man. They're just like absolutely never trust them. And so like you're relying on your engineers and the tooling that they've built to be 100% accurate. But then you yourselves as a compliance team, or as whoever it is, the organization that cares about this stuff, that the real source of truth is this set of wallets that you are tracking. Now you can also flip this. Some of our clients do this where they actually add all their wallets to the FBO account, and then they use a reconciliation process to compare to the IBOR. Both totally work. But part of Bitwave Institutional, and one of the really important things that you have to do, and I put Bitwave there, but you can use a spreadsheet if you really want, is on a daily basis or on a monthly basis, you really have to be looking at, okay, here is what my engineers and the IBOR say that we have. Here is what the blockchain says we have. And then we need to compare that both for like tracking the assets in general. So, one of these two is going to actually get the assets. And the other side is you're doing both a balance level and transaction level reconciliation. So if you out of your IBOR, you should have a table that has every single one of the deposits and withdrawals. And every deposit and withdrawal should line up to a on-chain transaction from the blockchain. So one of the things we have in Bitwave Institutional is a full reconciliation tool where we can take transaction IDs, compare them, actually allow you to run a rec process, kind of like you would have in Blackline or something like that, to make sure that there is a third party looking at the data, comparing them, and making sure that these things are all accurate. And then of course you're going to feed that all into your A board. That's supposed to say A board there. That's my bad. So once you've gone through and done your rec, you've categorized everything, you're then gonna be able to feed that into NetSuite or whatever you're using as your accounting book of record. Bitwave sits as the middleman through all that. Of course, you can use a spreadsheet if you want to. The other piece of this that we're going to talk about here, and this is where I'm going to show a real brief demo, is gain loss segregation. So gain loss segregation gets super complicated in this world because you don't just have one giant bucket of gain loss. And actually, you also don't really have, each wallet as a separate bucket. What you have to do is you have to start thinking about how you're going to segregate the gain loss between client gain loss, which would be, hey, we have these client assets that we're tracking. That is not gain loss that hits our books as the Treasury, as the institution. You have the Treasury gain loss. This can be really complicated too. So for instance, like what we see, a lot of our clients have this other thing where they, it depends on how you organize your exchange and your institution. But if you are someone like Coinbase, then Coinbase, it's really easy. They have a big market. So when I trade one Bitcoin and someone gives me $1,000 or $50,000, there's someone else on the other side of that. So they're just, in their book of record, they're just tracking the, client A has this much more USD, this much less Bitcoin, blah, blah, blah. A lot of our clients actually end up in a different situation where they are the counterparty. So this gets really complicated, and it's worth thinking about if you have any clients that actually are doing a sort of digital asset institutional work like this. What'll happen is that Robinhood probably is a good example of this, where you open your app and you buy Bitcoin. There is not a market there. Robinhood is actually the other side, I believe, and I could be wrong about this. Don't quote me, I guess. But Robinhood is the other side of that trade. So Robinhood holds a set of Bitcoin that when you go in and say, hey, I want to buy some Bitcoin, they sell it to you. So suddenly, like it's very different because it's not a client-to-client trade. It is actually Treasury assets that you are disposing of to give to your clients. And that is a really complex set of things because you suddenly have to mark that movement from a Treasury asset to a liability. Whatever it is you dispose it as, like the difference between where you got it, where you dispose of it is your gain loss. You're obviously doing fair market value, liability tracking, all that kind of stuff. So this is one of the things that Bitwave does incredibly well is we do this thing called inventory views. And that's what I'm going to be showing off here really quickly. And inside of inventory views, you can actually do really complicated inventory groups. So you can say, okay, I want these 3 wallets to be tracked as inventory, as one inventory, these 3 wallets to be another one. And when I go and I spend from this inventory, only deduct from that inventory, and from this one that. Another use case that we see a lot here, which is probably really relevant for a lot of your clients, is zero cost basis tokens. So this is the ultimate nightmare for everybody. And we have a really awesome way that we handle inside of Bitwave, is the idea that you have a lot of tokens that are sitting on a zero cost basis. So for institutions, that could be IEO tokens. So you agree to be the initial exchange offering. They're going to give you a whole heap of tokens. Because those tokens have never been priced before, they're all sitting at an incredibly low exchange rate. Well, what happens then is a lot of exchanges, a lot of institutional players, they actually have, they kind of double dip in that they're going to be the exchange and they're going to do this IEO offering, but they also have a market making team who are going to be buying and selling. But that creates this really interesting issue is, let's say I get $1 billion of tokens all at zero cost basis, or what ends up being worth $1 billion. But then my team over here, my market making team, starts buying and selling to make the market. Well, if you're treating this all as one giant inventory, what you are doing is, because all these IEO tokens have the earliest acquisition date, you're going to be burning through all of your buys go at the end of the FIFO. All of your sells come from the top of the FIFO. So you essentially are like burning through all of this gain loss while you're doing market making activities. So that's obviously insane. No one would ever do that. The way we handle that in Bitwave is pretty clever. We have this notion of these inventory groups. So it's really common for us to set up one of our organizations where we actually, it's really common for us to set up one of our orgs. Let me get this share in here. So these are Bitwave inventory views. It's one single place. Really important thing to think about for Bitwave, and I'll just preface this because I didn't want to spend hours and hours demoing the product here. The way Bitwave works is that it's what you essentially are doing is we aggregate all your transactions into one place, and then we let you do categorization. So we pull in your chart of accounts from QuickBooks, NetSuite, whatever it is. You can even have both hooked up at the same time. You go through, you categorize everything. what we're doing at that point is we are essentially building a base ledger. So I don't always use that term in my demos, but when I'm talking to a group, a illustrious group of crypto accountants like this, I can, because we build up a base ledger that basically has your journal entries baked into it. So in this case, I'm looking at like I have some ETH that got deposited, and then a trade that I did here. At that point, we don't have any of the gain loss information baked into it. We have this notion called inventory views, where what you do is you actually take that base ledger and we project it into different spaces. And so this is how we handle all of the really complicated stuff that we handle. So everything I've been talking about right now in terms of institutions. So segregating out individual accounts, like individual wallets, GAAP accounting, IFRS, this move to FASB. You basically can create an inventory view that, in this case, I'll look at one of the ones. This was the US GAAP 2023 before the FASB changes. You can kind of see all the stuff here, what we are seeing on for carrying value, all of those. And then, when you're ready to essentially move from kind of US GAAP 2023 to US GAAP 2024, it's as easy as coming in here, putting in US GAAP 2024, picking strategy. So this allows you to do FIFO, LIFO, FIFO cost averaging. Then we have some really, really complex spec ID. So you can do spec ID where you're actually directly selecting lots to pick. You can do it based on HIFO. You can do it based on LIFO if you actually you can pick based on different time periods, all that stuff. I won't bore you guys. But one of the coolest parts you can do is we have this notion of, and I'll talk about this really briefly. I'm running out of time here, but one of the cool things that we allow you to do is as everyone now is moving up to FASB 2024, we actually have baked in support for segregated picking strategies and valuation strategies on different tokens. So this is one of those places where most of the people, with this new FASB, there was this guidance that Bitcoin and ETH, it's super obvious those are going to be fair valued, but a lot of other tokens are actually still going to be impaired. So with this, you can actually set up an inventory view where you say, okay, I'm going to use GAAP impairment, but then for ETH and Bitcoin, I'm actually going to do my GAAP fair value treatment on there. And so you can actually set exactly what you want to do with that. The other cool part about Bitwave is that because while you're going up and setting your base ledger, when you do something like a wrap, when you go from ETH to WETH, for instance, we don't force you to say that that's a wrapping treatment. We actually do all of our wrapping happens after the fact in these inventory views here. And so it's really easy. Is when we go from FASB, from the GAAP 23 to now the GAAP 24, and actually everyone was using wrapping treatments before, and now everyone wants to stop using it because it's not allowed. It's as simple as clicking that. And that just means, hey, ignore all the wrapping treatments that I've set up and then go and figure out my taxes. So it's super easy to do this. This allows you to really easily switch between the different views, and you can have as many as you want here. So you can always go in and look at different ways of actually examining it, different types of FASB, IFRS, all that kind of here. What I was going to show here, of course, related to institutions, is that we can also then do these really complex inventory views around inventory groups. So what we can do is we can set up an inventory group that actually just takes, where we segregate out one specific asset. So let me show it over here. So we can go in here, we can take a inventory group like our primary one. And this is actually going to we can take each of our inventory assets and select exactly what group we want to put it in. So if you want to have an inventory that has just one single wallet, like this one does, or if you even want to put a different inventory in every single one of them, you can do that very, very easily. You can segregate them out, and then you can actually then basically have for IEO tokens, you have one single place where all of those zero cost basis tokens can go, one single inventory that will not get touched. So your market making inventory sits over here, your zero cost basis inventory sits over here. This doesn't get touched unless you explicitly are moving money in and out of it. And all the market making activity over here that actually hits the gain and loss that you would kind of expect. So it's one of those things that we think about these problems very, very differently than anybody else. We work very hard to make a very powerful tooling around this. And this is one of the fun parts about it. So let's go back to some of the institutional stuff here. The last thing I'll talk about, because I'm kind of running out of time here just a little bit. So one thing is you are going to want to do some method of client asset tracking. So this is one of the things we have in Bitwave is you can actually structure what we call client organizations. These are sub-organizations off your primary Bitwave. You have this sort of complicated structure like this with your enterprise org, your subsidiaries. You can then add one more layer, which is actual client organizations underneath that, Client orgs would be your clients. Like you as an exchange, you have a bunch of clients. You can create one org for each of them, and then basically, as you feed in data from your IBOR, we'll pick it up, and then we can calculate all of your 1099 reports and all that kind of stuff. This is really important for you to do because whether if you're using Bitwave or using a Excel spreadsheet, you need to be tracking your client assets, and of course, the new reporting rules means you have to be doing 1099s for those. And so we've baked this into actually basically having these org structures where we'll set up the client org. You can then run your inventory views on them to figure out what their cost basis is. And you can even run a tool that will pick up the data, the transactions, and feed those back into Bitwave as your liabilities for your client asset tracking there. So really cool stuff here. But this is one of the things, I mean, I'm kind of like glossing over this just a little bit, but it's almost across the board. One of the things that our institutional clients have never really done is draw out this flow chart where you have your enterprise orgs down to your client orgs, how they all roll up, and then this flow chart, which is what piece of the IBOR is tying into what piece of the blockchain, and how are we going to think about this sort of like reconciliation between our internal systems and the blockchain. I swear it would be surprising to you how few of the big institutions we talk to, like, the big boys obviously have, like Coinbase, these guys have already all done this. That's not a problem. But like, as you get to like the mid tier, this sort of compliance stuff is not top of mind. And it's so incredibly important to actually get into it. So, all right. Last thing I'll talk about is a little bit more on the Treasury side, and I'm running out of time here, but one of the really important Treasury pieces here that you should be thinking about is payments and Treasury management. So this is another thing where we have a great solution around it, but this is obviously something that you yourselves can do without Bitwave. You can do it in a spreadsheet or whatever. But the high level is that part of Treasury, a really important part of Treasury management is understanding the payments you have going out. So of course, like part of that is, and Bitwave has a full solution for token-based invoices. So if you are tracking token-based invoices, the ability to track that in place. We actually also have a great request integration. So if you're using request, we can pick up all your invoices from request. We can bring them into Bitwave. We can price them, which is a really important part of it because request doesn't do any actual pricing. You have to price them. We can then push them into Xero, QuickBooks, NetSuite, whatever you happen to be doing there. And so, but as part of that, there's a reporting aspect, which is, hey, we have a bunch of upcoming bills. We need to know how much we need in our various wallets to pay that off. So this is a muscle that you as a treasurer want to start building up, which is how do we think about the process for making sure we have enough money in the various payable wallets. Actually, there's even another process here, which is how do we have payable wallets, like as opposed to just using like our main cold wallet to pay out invoices. That's not what you want to do. You want to think about crypto like petty cash. You want to have smaller wallets where you're going to transfer tokens in, and then on a weekly basis use those to pay your bills. So part of this is making sure that you have a really clean way to report on the invoices you have due, and then a really clean way to sweep from your big wallets down to your little wallets, and then give just certain people access to it. Vendor management in a crypto world is a totally different ballgame. We all think of vendor management as you set up Coupa or you set up QuickBooks. Maybe they do an ACH penny test. In a crypto world, it is just so incredibly different. It's hard to describe because what you do with a penny test, like, yeah, there's fraud in ACH. Don't get me wrong, and it happens more than I think we'd like to admit, but it's kind of a little bit fewer and farther between. The idea of this like completely obtuse address that you could send $1 million to, and if someone were to sweep it, were to fudge that address or like sneak a bad address in, you just lost $1 million is really critical. So part of what we've done and how you should be thinking about this is that when you're onboarding for vendors for crypto, you need to have secure channels to get their addresses, and you need to have really secure models for how to actually validate those addresses, whether that be them signing a message or actually doing penny tests yourselves with ETH or whatever it is. So we have a bunch of stuff around here. If this is something you're interested in, there's a button that says request a demo. We can show you our enterprise payments tool that allows you to do this. And then of course, how you get your crypto payments, because paying with crypto isn't hard. Open up MetaMask, send $1,000. That's super easy. What's hard is you have workflows that you already run, and you as an institution should have very complex workflows, multi-layer approvals. So part of the way we think about this problem, part of the way you should be thinking about this is how do you get crypto payments to fit into NetSuite's, idea of invoices and bills and all that kind of stuff. Bitwave Institutional goes through all this kind of stuff. I'm at the top of the half hour. This was an absolutely amazing time. Thanks for listening. Thanks for there's some chatting. Thanks for getting involved on there. One of the things I'll mention is if you are interested, we have a really robust Bitwave partnership program, certified partner program. We do a lot of CPE. So last year in November, we did like 40 hours of CPEs in a solid week. We just had everyone go in and talk. And we obviously have preferred pricing on Bitwave and things like that. So if you're interested, please reach out, click that demo button, all that kind of stuff. Thank you guys so much. Have an absolutely wonderful afternoon, and stick around for my co-founder in the next session here.